In this video, I'm going to share with you some retirement advice for things to plan on in retirement. I'm sharing this from the spirit of I have kind of a weird retirement story. It's not that I worked until I was 65 and then I stopped from a corporate job. I actually left my corporate job as an accountant in my 20s, and I did that so I could work in commercial real estate as my own boss. I really wanted that flexibility and the ability to be able to do more. And then I ended up a few years later moving overseas for my husband's career, and he ended up retiring in around midlife, and we sort of, I like to say, stumbled into early retirement. That's what I write about and talk about here. So I share this with you from a perspective of retirement advice from having been there and done that, both myself and with a spouse and at various time frames in my life. But let me get to the information that you want to see, and that is retirement advice, 5 things to plan for in retirement, because they are pretty sure to happen and they can really sort of play havoc on your retirement plan. Okay, so the very first thing is to plan for inflation. I know it sounds really sort of academic, and it's one of those things we don't really see. We don't feel it like we feel some of the other things on this list that really hit us hard. But inflation is here. It's 3% a year. If we look at the long-term historical average, recently, before inflation rose again over the past, I guess, year or so, it was about 2% in the 2020s decade, but it has been as high as 13%. Inflation has been as high as 13%. Can you imagine inflation being so high that what you purchased last year was 13% more this year? And for retirees, this is particularly important simply because we have to increase the amount of income we have, or the amount of money we have to spend to pay for those same goods and services at an increasing rate every year. So even if you think about the long-term average of 3%, and you say over 30 years, if you're going to live 30 years in retirement, 3 times 30, that's a 90% increase, and that's not even counting compounding. So mathematically, that's really not right. It would be a whole lot more because it would be compounding every year. So I'm just throwing that out as a really rough figure. So everything would cost over twice as much more as when you retired. Inflation is big, it's real, and these are really just things to plan for in this video, but I will throw out one of the ways, and I'll throw out some solutions as I go because I think I've dealt with everything in here. But inflation, one way to protect yourself from it is to have assets as investments that are inflation hedges. One of the things that we've done is purchase real estate rental properties a long time ago, and one good thing about real estate rental properties is you can increase the rent, and the rental properties also increase in value from inflation. So real estate can be a great inflation hedge. You can also buy real estate that's publicly traded if you don't want to fool with owning real estate yourself, which is understandable, although I find it not a hassle at all and I quite enjoy it. And the other thing is you can look at TIPS bonds, which are inflation protected bonds that are issued by the government. So there are some other things you can do to protect yourself against inflation, but those are the most common ways. So that's the very first retirement advice I would give you, is to plan for inflation in retirement. These are mostly financial related in this video, by the way. If you like this information so far, I'd love it if you would click the thumbs up below the video. It helps my channel so much and helps me be able to provide this information. And if there's anything that I say here that you want me to make a video about, I would love it if you would let me know in the comments section. I want to talk about things that you want to know about. And having done this for about 40 years, I sort of know a lot about different things, and I have a little different perspective than what you'll hear from some of the other YouTube channels. All right, so let's move on. The next piece of retirement advice I would give you is to plan on becoming more risk averse after you retire. So there's something that happens psychologically about that paycheck ending when we still get steady paychecks. If we mess up, we can fix things, right? We can save more money. We can maybe even still increase our income. We can maybe get bonuses. We can do things that will help us reach what we need, our financial goals that we need for retirement. But when that paycheck ends and you're no longer employed, or if you own a business and you sell that business, things change. Things change in your mind, and they change in reality too, because unless you decide to get back in the game, either start working again and or own a business or do what you did before to generate income, or something new to generate income, which I'm not against. I love that approach. But a lot of people don't, and a lot of people are burned out. They're ready for the break after retirement. Then get ready for that shift in your mindset, and notice that if you're not wanting to invest and you're wanting to just keep all your money under the mattress or in the bank, not earning very much interest at all, then think about, am I doing this because of a mindset shift, because I'm retired, or am I doing this because it really makes sense for me to do this now from an investment perspective? The next piece of retirement advice I would give is, that was really a shocker for me, and that's how little investment income your capital generates. It takes a lot of capital to generate income from stocks and bonds, especially with stocks being overvalued as they are as I make this recording. It may have changed by the time you see it. And with interest rates still relatively low, it takes a lot of capital. So you can feel like, well, I have this certain amount of money and I'll just live off of dividends and bond interest, but lot of capital. So one solution to this is to really get savvy about investments that pay higher income. There are some excellent newsletters and services that do the analysis for you and make recommendations. This is something that you may want to consider if you're really planning on living off of income. I've done another entire video on this called Retirement Strategies, where I talk about living off of income versus making those retirement withdrawals. You may want to check that out. But one of the things to be aware of is just that the income generated, the yield from most traditional assets is very low. Another solution is to buy alternative investments, and they typically have a considerably higher yield as well as tax benefits. And then of course there's always the possibility of adding something like out of the money covered calls to stock positions that you already own and increasing the yield on the stocks that you own anyway. And covered call income can be 2 or 3 4 times that of dividend income. I've done some other videos about covered calls, so be sure to check those out if this interests you at all. The next piece of retirement advice I would give is to don't think necessarily that what has happened recently is going to continue happening throughout your retirement. We have this tendency called recency bias to think what has happened lately will continue to happen. I remember in 1999, John Bogle, the founder of Vanguard Investments, saying, do not count on the returns that we've seen over the past 10 years or so from stocks to be going forward over the next decade. And boy, was he right. That next decade ended up having a negative average annualized return for that entire decade. The negative return, if we took out dividends, which many people do in retirement, was about 2.92% negative. So that was a 10-year period for the average annualized return, excluding dividends. Things change, and following the tremendous bull market of the 1990s, things got tough the next decade. So going forward, we had an incredible bull market in the 2010 to 2020 decade. Stocks are still really overvalued. I don't know what's going to happen going forward. I would just be really surprised if returns are as good going forward. Plus, we had declining interest rates during that decade that helps stock prices rise and helps bond prices rise. So that's over now. And yes, there are some gyrations in interest rates, and I'm not sure what will happen. Nobody knows for sure going forward with this, but we do know we ended a 40-year interest rate cycle, long-term interest rate cycle that helped stocks and bonds go up in price, and that's over now, really. So they can go down a little bit more from here, but not much. So don't assume that what has happened in the past few years is going to happen throughout your retirement. And then the next piece of retirement advice I would give you is to be aware that bear markets happen, period. Probably more importantly, bear markets are not necessarily like the bear markets that we've seen in the 2010s decade, near the end of the 2010s decade, where they were really short and sweet bear markets, barely hit that 20% down, big deal, right? I remember in October 1987, we had a bear market in October, and it was only a few months, and it was about 23% down, and that's what I grew to know as a bear market. As an investor, I hadn't been investing that long then, and it was just when I was starting to have some money to invest. And boy, then after our stumble into early retirement, we had the tech buzz, which is horrible. The NASDAQ dropped 72, some studies say 72%, others say 78%. And then the S&P 500 dropped during the financial crisis, that bear market, about 55%. So those were serious bear markets, and they were much longer in duration. So know that these happen. And while the Federal Reserve can intervene, they take actions to steady the storm and it helps stop the decline. It doesn't always work, and the bag of tricks may be getting a little bit empty at this point. So these are 5 things that I would say as retirement advice that I've learned since my spouse and or I left retirement, as far as what really made us have to reevaluate and really things that we weren't planning on. And remember, retire certain.